I mean, crypto had a huge deleveraging event on October 10th, and part of that was triggered by the escalating tensions with US and China on tariffs and trade. And that was the biggest liquidation event in 5 years for crypto. So there is still those ripple effects, 2 weeks later that are plaguing the crypto market, but I think we're almost through that. I think you're going to see a crypto rally into the end of the year. A measure like something called open interest for both Ethereum and Bitcoin are at record lows at a time when the technicals for both Bitcoin and Ethereum are flipping positive, because Ethereum is seeing so much activity because of stablecoins, and it's not reflected in the price. It does take time. So to me, because like what I'd call the fundamental activity on Ethereum is really picking up, it argues for a pretty big move into end of the year as well.
In a year that's been anything but predictable, Wall Street's biggest bull, Tom Lee, is predicting a huge turnaround for crypto. Despite fears of a government shutdown, tariff battles, and months of skepticism, the S&P 500 has already surged more than 15%, and Lee believes the rally is far from over. He's projecting that by year's end, the market could climb another 10%, driven by fresh Federal Reserve rate cuts and renewed investor confidence. But what really caught attention in his latest interview is his prediction and outlook on crypto. After the largest deleveraging event in 5 years shook Bitcoin and Ethereum earlier this month, Lee says the worst is behind us. Ethereum today may be in the same position Bitcoin was back in 2017, when it rocketed from $1,000 into the financial spotlight as Wall Street started paying serious attention. And just like Bitcoin back then, Ethereum is now catching the eyes of institutions, hedge funds, asset managers, and major investors who see its role extending far beyond speculation. He points to record low open interest and improving technicals as signals that a powerful rebound is near. According to Lee, Bitcoin has proven itself as a legitimate store of value, barely flinching even after billions in liquidations, and Ethereum's on-chain activity is accelerating beneath the surface. He believes capital could rotate back into risk assets like equities and crypto. The community is buzzing, and adoption is spreading across industries from decentralized finance to stablecoins. Even the regulatory environment, often seen as a stumbling block, may be tilting in Ethereum's favor. That makes Ethereum more than just a digital currency. It positions the network as a backbone of future financial infrastructure. So while most investors are still cautious, Lee sees opportunity, a window where both Bitcoin and Ethereum could rally sharply into year's end. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
The first place to start is why I think the investment outlook is better now than it was at the start of the year. So the S&P's up 10% year to date. You can see that huge dip that started in February, was a waterfall decline in April. I think a lot of people panicked and unfortunately sold at the bottom. But we had advised folks that when you see waterfall declines, as long as you don't have a recession, markets will stage a reciprocal recovery, which is in fact what happened. So think of that decline, which in a way was a bear market because it reset positioning, and now we're in a new bull market, but that was actually a very predictable recovery. And so if you ask me where I think we are by the end of the year, I do think it's a strong fourth quarter. So I think the S&P gets us to 68, 6,900, possibly higher. Mark Newton does think, again, similarly, that we're going to have a big fourth quarter. And there's a couple of reasons for that. One, corporate profits are strong. Household balance sheets are still strong. We've got a lot of AI visibility. Something to think about, many people don't, is the financial sector is about to have some pretty big productivity gains coming the next 3 to 5 years. And I'm going to cover that in this presentation. And the Fed is going to cut rates. And then that gets me to the second driver of the US, which is blockchain. Wall Street is finally embracing blockchain, and not because they're becoming believers in crypto, but they believe that this is a way to improve the cost and productivity of their business. Okay, now this is going to take a little time to explain because I don't think people are talking about this But let me explain to you why, if our view is correct on blockchain, Wall Street stocks like Goldman Sachs and JP Morgan are going to become a lot more profitable. Their margins are going to go up. They're going to become a lot less cyclical, and their PEs will probably look more like tech stocks. So I have to go all the way back to 1971, because in 1971, the dollar became synthetic. Now, you may not know what I'm talking about, but in 1971, the dollar was no longer convertible into gold, which means the dollar became a synthetic instrument because you could only exchange it for $1. Now think about what that means. In 1971, a lot of folks got scared and they said, well, I want to buy gold instead. And actually that was a great investment. But if everyone bought gold, the US economy would have collapsed, right? Because the dollar represented nothing but itself. So you had to create a system where people would believe the dollar was useful, and that was what Wall Street did. They created all these financial products because the dollar became synthetic. It's not just the dollar that's becoming synthetic. Everything is going to become synthetic. Let me explain that. The first is the Genius Act, which is what Congress passed earlier this year, which creates the stage for a stablecoin boom. And then the SEC announced Project Crypto, which is encouraging Wall Street to move on to the blockchain. Remember, the blockchain is a public software, basically gigantic public software, but what it does is it verifies transactions and it stores records and information, and it eliminates a lot of the costs and friction that Wall Street experiences today. In fact, Treasury Secretary Bessent believes that just the stablecoin market could be $3.7 trillion compared to $250 billion today. That's exponential growth as we start to see Wall Street move things synthetically onto the blockchain. So what does that mean? Well, if everything's becoming digital, okay, you've heard a lot of people say, well, you want to find the digital store value, the digital gold, which is Bitcoin. And that makes a lot of sense. That's what Fundstrat has been advocating for since 2017.
Ethereum isn't just holding its ground, it's starting to pull ahead. As 2025 winds down, Ethereum has actually outperformed most other major crypto assets, driven by record on-chain activity, surging developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum is signaling that it could be a real leader in this next phase, setting the stage for what analysts call its strongest run yet. Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
When we first started writing about Bitcoin in 2017 and we said it would be institutionally adopted as digital gold, people ridiculed us. We lost a lot of customers actually because they thought we really lost our grounding to reality. But as you know, 8 years later, that's the narrative. Bitcoin is digital gold. Well, let's think about the next 10 to 15 years. Wall Street's going to build a market for digital assets. Now, for reasons I won't cover here, it's going to be on Ethereum because that's really where everyone is building this future. But the thing I want to highlight today is that Wall Street is going to build a market for digital assets onto the blockchain. So it's more than just dollars, it's everything. So think about this. There's two story arcs that are going to be the next 10 to 15 years why I think it's the biggest macro trade. The first is stable coins, the upward one. Stable coins, we're going to tokenize stocks. NASDAQ actually just approved that this week. We're going to tokenize credit. tokenize real estate. Maybe we'll monetize our reputations on the blockchain so we can value that. And we'll monetize intellectual property, which, as you know, is the largest component of CapEx today. So if you look at GDP data from BEA and you look at what they call private investment spending, the largest share of that is intellectual property. That is easily moved onto the blockchain.
We had this government shutdown, tariff headaches. So why should investors be more bullish on risk assets, the market overall, than they were 6 months ago?
Well, John, even at the April lows, just to be clear, our S&P year-end target was 6,600. So we were still expecting explosive recovery in markets. But we are above that level. And, we're 10 weeks before the end of the year and the S&P is at 6,800. I think it's still a base case then for people to say that in just a typical year, the S&P should gain another 4%. That would put us over 7,000 into the end of the year. And I think that that's sort of the minimum. But because we've got the Fed cutting, and they started in September, they've been on pause all year. That only happened twice in the last 50 years, which is 1998 and 2024. I actually think the S&P, given the skepticism that's been plaguing this market all year, we could do far better than 4%, maybe even 10% into year end.
Wow. Okay, so where does crypto fit in, especially when you're looking at how those currencies are moving versus what's happening with tariff concerns, global trade concerns, et cetera?
I mean, crypto had a huge deleveraging event on October 10th, and part of that was triggered by the escalating tensions with U.S. and China on tariffs and trade. And that was the biggest liquidation event in 5 years for crypto. So there is still those ripple effects, 2 weeks later that are plaguing the crypto market. But I think we're almost through that because a measure like something called open interest for both Ethereum and Bitcoin are at record lows at a time when the technicals for both Bitcoin and Ethereum are flipping positive. So I think you're going to see a crypto rally into the end of the year. And it really does help to see JP Morgan say they're open to the idea of using crypto as collateral.
On the exchange, where you talked about the fact that cryptocurrencies tend to be early indicators of where stocks are directionally headed, as well as indicators of liquidity in the broader market. So given what we are seeing in Bitcoin, and as that relates to the S&P 500 and arguably what we're seeing in Ethereum and what that says about the Russell 2000, I want to get your thoughts.
Yeah, I mean, I think it's sending a pretty bullish signal. Part of it is it's a counterfactual statement, but crypto had the biggest liquidation event, deleveraging event in history. I mean, the number is probably multiples of what happened during FTX, and Bitcoin ends up down 3 or 4%. So I think it shows you that Bitcoin itself is proving to be a pretty good store of value, because if we had seen this happen with gold in the gold market, if there was a huge deleveraging event and gold was only down a few percentage points, we'd of course consider that a real validation. And it's also true of Ethereum, because Ethereum is seeing so much activity growth. I mean, on the L1 and the L2, because of stable coins, and it's not reflected in the price. It does take time. So to me, because like what I'd call the fundamental activity on Ethereum is really picking up, it argues for a pretty big move into end of the year as well.
Do you think we're seeing a rotation out of gold, given the fact that it just moved so quickly to record highs, into some of these cryptocurrencies?
Now, I don't follow gold as closely, but I did talk to Mark Newton, our head of technical strategy, and he does think that there was what he called a cup and handle pattern earlier this year, and then the targeted move was right around where gold is peaking now. So he does think we might be seeing a short-term peak in gold. That's kind of good news for almost everything else, because gold was sucking the oxygen out of equities and out of crypto. So a gold cooling is probably bullish for both stocks and for Bitcoin and Ethereum.
Where does all of this leave us? Ethereum has crossed $4,000, weathered short-term volatility, and is now attracting the kind of institutional attention that once catapulted Bitcoin into the mainstream. Analysts are increasingly framing this as Ethereum's 2017 Bitcoin moment, where the groundwork laid over the past decade finally meets global recognition and capital inflows. But here's what makes this cycle different. Ethereum isn't just competing as a digital currency, It's the infrastructure powering decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. That combination of utility and adoption is exactly why many see $5,000 and beyond as not just a price target, but an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets. Tom Lee and other top analysts emphasize this point. Ethereum's real growth story is still ahead of us. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to be a defining force as we head into 2026. The bottom line: the short-term swings may grab headlines, but the long-term trajectory is unmistakable. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology, and if history is any guide, the breakout we're seeing now could be just the opening chapter of Ethereum's biggest run yet.